Which market do you believe is best placed moving into the new year as far as some of that upside?
I think overall we believe that within the emerging market space, Asia remains will remain the bright spots, and for various countries and country-specific reasons. So if we look at like China, which is the topical area this year, we think that our selective approach would continue to pay off as we approach investing in China this year. So, I mean, if you look at the way China is kind of being shaped out for the year, is that things are pretty. The expectations are fairly low. But then in the reality is that, there is a lot of form, and of course there's a lot of form of, stimulus fatigue, as a few of your previous guests have highlighted, whereby, since March, the stimulus doesn't happen, people are waiting. So the way that we kind of approach this is really to look at longer term stories, and we look at two sets of companies that basically are able to self-help and improve their ROEs, and at the same time looking at companies that have longer term government support. And if you look at government support, right, I think we kind of try to bucket it in like when stimulus coming, how much government's going to spend in the sector. But government support is not just about the fiscal side; it's also on the regulation side. That the regulations allow things to be implemented more quickly. Easing some of the guardrails to allow technology to proliferate a little bit more quickly. So these are the kind of sectors that we kind of look at. So if you look at in terms of the second bucket, whereby the government is kind of like supporting longer term, right? This is abundant in the tech space, which is a longer term story of China reducing their reliance on foreign technology, right? And I think of certain sectors of these companies, the sectors like such as intelligent driving, are reaching kind of an inflection point whereby they have built up like a lot of these like EV companies have built up a certain scale. Tesla's last quarter, last year they gave, I think they just said their deliveries was 1.7 million vehicles, right? And quite a fair bit of Chinese companies have actually hit that. And they are in these positions whereby there's cash flow and there's scale for them to actually develop a lot of this autonomous technology, smart driving, AI assistance, and quickly implement it on their products, on the skills they have. So, and this, if you have the direct government regulation to support it, this can be really helpful. And if you look in terms of self-help, right? I mean, I guess the key headwinds among, let's say, the consumption or the goods company is actually domestic competition. It's just been like really intense. Yeah. But if you look at in the midst of all this intense competition, there are a few sectors such as tourism, household appliances, their value proposition that they actually give versus their global peers has actually improved during this period of intense competition. And that's where we can see companies actually helping themselves and being better and improving their value proposition amidst all this, in midst of this intense domestic competition.
Yeah, you've touched